watching Markets at Noon, and it's time to meet the fund manager and get your latest portfolio strategies checked. I have with me Jaiprakash Toshniwal, fund manager and senior equity research analyst, LIC Mutual Fund. Hi, afternoon, and welcome to the show, Jaiprakash. And let's just try and understand what are you trying to gauge from this ambiguous nature coming out from the of US officials, regarding the trade tariff delay. How are you looking at it? What are the kind of signals, and how are you understanding it?
Thank you, Kavita, for having me on the show. So about the US tariff as such, as you know, as you rightly put out the word the ambiguous nature that we were earlier thinking about the things to come on 9th July, but now it's most likely to postpone to the August season as such. Difficult to comment on this point, what can come and this thing. But having said that, whatever discussions we have with our investing company and all, everyone is waiting for that. So how things will pan out. Difficult to comment in terms of clear totality how the impact gonna be.
All right, but Jaiprakash, hi, Ankur this side.
Good.
There are two
Hi, Ankur.
scenarios.
Yes.
Yes, there are two scenarios currently. A mini deal getting announced in next 24 to 48 hours, and later on the finalization of deal happens, or the whole deal gets delayed to 1 or 2 months, whereby the letter will be handed over by Mr. Donald Trump. So in both the scenarios, how one should gauge the market and which are the sectors per se where one should keep an eye?
Perfect. So now, in terms of the deal, which we already know that whatever happened in the past, the market has kind of absorbed all the negativity around it. What we understand is once the deal, either comes in a mini form or as well as delayed to an extent. If comes in a mini form, it would be positive. Market will see somewhat of positive buoyancy because it gives more clarity as such. A postpone may deter some for have some negative impact for some time because the kind of opportunity or the kind of so to say clarity get delayed for some time. In that case, that would be negative.
What are the sectors on your radar now? This definitely is one of the triggers that you'll be factoring in when you'll be making your strategies for the portfolios. But having said that, what is the house view in terms of sectors amid so many volatility and unexpected things happening on the global front?
So, Kavita, along with the US issues or the tariff issues, we have other various factors, both working domestic and globally. And one should factor in that domestically, this time we are on the very strong footing because both the macroeconomic pillars, which is the fiscal policy and monetary policy, are on very sync, working, pushing for the growth, at least in the domestic market. Export is hardly 12% sector, so we should also now not worry much about the export side. On the domestic side, we are very positive on NBFC as a trade because we believe that sector is very good getting tailwind benefit from the rate cut as well as the other regulatory scenarios. On the other side, we are very positive on manufacturing, pharma, and even in the manufacturing, the subsectors are, let's say, chemicals, auto components, and other related manufacturing sectors. So there we are very much positive as a house.
Jayaprakash, I want to understand from you in the current scenario, as we are discussing, as ambiguity is there. But if someone wants to build a portfolio or buy the stocks now, which will be those sectors which will be kind of insulated from the news events which will come later?
So Ankur, it's very while there are one or two sectors we can say directly get impacted by the ambiguity, but there would be n number of sectors which also get indirectly getting impacted. Having said that, at this point of time, one given the valuations comfort which we have and given the kind of growth rate scenario which we have, we believe NBFCs, manufacturing, IT, and pharma. These are the four sectors which have came out reasonable valuations after because of this tariff AI issues or the global issues, these sectors have seen some kind of valuation derating, which has already multiple derating, which has already been done. I think these are the very, very good sectors to find out newer opportunities to pick up for investors. Having said that, if you notice about recent government initiatives, or so to say, about comments, DT Aayog report about chemical sectors, there is a news. I mean, there are likely lot many things which discussed about the policy initiative which should be done from the government side. So all these things are very boiled down to very positive for let's say chemical sector also along with the sectors which I mentioned.
Just focus on this particular structural change in the chemical sector that we'll be seeing post the Niti Aayog proposal now. I really want to understand and deep dive into this sector and understand how would this change the entire dimension of this particular sector. Definitely we are talking about making it more robust, but then what kind of industry and company impact are you factoring in now?
So basically, Niti Aayog reports talks about one market size of India moving to 1 trillion size, which is currently right now 200 to 250 billion dollar market size. So as this sector, if any policy supports come, companies will invest some kind of for special chemicals and all. And if we get a reasonable hand on the special chemicals, mind you, as in India as a house, or India as a country, is a very positive on the special chemical side, and which we have seen from n number of chemical companies talking about. And these we have a ready market in, let's say, Europe, US as such. And while commodity market is dominated by China, so in that context, if the more of these investments come into the specialty chemical side, it will be very positive for companies which are there into the sector, and also for India and all sector as a whole. Because 1 trillion, we are talking about a doubling of the market size in it in the next 5 years.
All right, I want to understand from you, Jaiprakash, about the FMCG sector. Today, you have seen that it has actually bucked the trend despite whatever happening is market. FMCG is up around 1%. How do you see the kind of commentary which is coming in terms of business updates from FMCG firms?
So FMCG per se, obviously you mentioned it's bucked the trend today, but and the commentary which you've got for Q1 is fairly reasonable and strong, so to say. But if we see on a historical basis, also this is commentary has come after a 3 to 4 quarters of lull period. So we need to see the sustainability of this commentary, or this flow going ahead as such. And even in the commentary side, what we have seen is like the HPC doing is better, but the other food category or the juice category are not doing that good. So we need to see the sustainability as well as the continuity of this trend going ahead to take a reasonable view on the sector.
Sure. I also want to talk about now market valuations. I know we can't talk to you about short term because that's not the time horizon that you expertise in. But then having said that, I really want to understand more steam left in large cap versus mid. I mean, now I think we cannot be taking small and mid cap name in one breath. The companies and the categories have really performed differently. But having said that, how are you looking at considering the first 6 months that we saw in this particular calendar year, next 6 months for small, mid cap, or do you think it's time to just go heavy in large caps, looking at the current uncertainty and unpredictability, mainly being derived from the global factors?
Interesting question, Kavita. So as a house, what we say is that we don't distinguish between the large cap, mid cap, and such purely because of the market cap definitions. We go by the earning growth expectations of these sectors as well as the stocks, and we try to find out stocks which can deliver reasonably 1.5 to 1.6x more than the nominal GDP growth in terms of earnings, and that too on a sustainable basis. So on that basis, where that's how we go as such in terms of growth. If you see about the Nifty indices, so to say the broader indices, we believe the earning growth over the next 2 years could be in the lower double-digit numbers. But there are certain sectors, stocks, as well as segments, so to say, the manufacturing or the sectors which I spoke about, where the earning growth can be much higher than the 15% kind of number, and that's where we are focusing as a portfolio construction.
Jaiprakash, also talking about the fund house, you have reintroduced equity schemes, I think 5 of them. Any specific
Yes.
reason behind that? Could you name the schemes? And is LIC also, LIC mutual fund trying to get more Gen Zs or younger investor in their kitty now? Is that the reason why you have reintroduced these 5 schemes? What is the plan ahead?
Yes, that's true. Most of these 5 schemes which we got were from the merger of the IDBI MF, which we got merged in 2023, somewhere around 2023. And most of these schemes we want to reposition. We have repositioned since the merger. We have built the portfolios, and now we want to go ahead and give it to the customer. I mean, our investors, and to state our strategies in this fund. Some of the name are the small cap multi-asset allocation fund, which we recently NFO came. Some of the name of the value and other schemes which are there in the focus portfolio. All these things are just to mention about our stance on the different strategies and the segments, and that's what we want to highlight to our investors.
Mr. Toshniwal, thank you so much for joining at this hour. And with this, it's time to take a very quick break. But after the break, we'll discuss why did SBI tag RCom as fraud account.